let's examine problem 7.5a. The first two parts of this problem are straightforward. We've done similar problems to them before. 7.4 is very similar, but part C is like a level of difficulty higher, significant step up in difficulty because it's an algebra puzzle to be solved. Let's do parts A and B, and I think you'll find pretty similar. If you got 7.4, no problem. Part C, though, a little bit more difficult. Let's jump into it. Your company is considering purchasing a new piece of equipment that will significantly increase efficiency and reduce costs. The equipment costs $400,000 and it will be depreciated using the straight line method to zero over its 4-year life. So, okay, $400,000 piece of equipment. It's going to zero and it's going to do that over 4 years. That is $100,000 per year in straight line depreciation, which of course is a number that's going to come in handy for us. The equipment will be sold for $20,000 at the end of 4 years, and the reason for the purchase is because it will reduce other costs by $130,000. So it doesn't increase revenue, it just makes us run more efficiently, reduces costs. So similar to 7.4. Per year, and will reduce working capital needs by $40,000. That's a first. Most of the time, we enter these projects and it increases working capital. This one decreased the working capital, which is good for cash flow in the short term. The company's tax rate is 20% and the required rate of return, the discount rate, is 10%. Should we accept the project, we'll use NPV, net present value, to figure out if we should accept the project or not. And to get to NPV, we got a bunch to do. We got to do a pro forma income statement is a great starting point. So how does this project affect sales? It doesn't. No change in sales. How does it affect costs? Well, if successful, costs are actually reduced by $130,000. So a reduction in costs means earnings before interest, taxes, depreciation, and amortization, EBITDA, should go up by $130,000. That's, a savings, right? What about our depreciation? Well, our depreciation is also going up by $100,000, meaning our EBIT leaves us $30,000 better off. Earnings before interest and taxes is up 30. Well, interest is not considered here, even though we may be borrowing money. Interest would be considered in a future calculation. For this, though, we're looking at the project on its own terms. We're not considering interest because that's a financing option, right? That's not really intrinsic to the project. If you could finance it with your own cash, you don't pay any interest. Does it mean it's a better project? No. So, okay, EBIT is 30, so we ignore interest. If there was any, there's none mentioned here, but we have to deal with taxes. Taxes are 20%. 20% of 30,000 is 6,000, leaving us net income of $24,000. Okay. Well, remember, if we're doing net present value, we need the cash flows here. So we go from our income statement to operating cash flows. And a way to calculate operating cash flows that we've been doing, standard way to do it, EBIT plus depreciation minus taxes equals OCF. So here's our little operating cash flow calculation. Our EBIT here, just taking it off that income statement, $30,000. Is that visible? It's hard for me to tell. I think it is. Depreciation, we add 100,000. Take away taxes, take away 6,000. And 30 plus 100, 130 minus 6 is 124. Okay, our operating cash flows are 124, and it's just savings, right? We're saving money. It says 130 grand, but in cash, we're actually saving 124 grand each year. So what does this look like? I always like to draw a bit of a timeline. So year 0, what happens? Well, I got to buy an asset, buy $400,000 worth of equipment. That's negative cash flow. But I also save on working capital. This reduces working capital, which is good for cash flow. It's a plus $40,000 to our cash flow. Year 1, we just save our OCF, 124 grand, right? That's That's why we're doing the project. It's why I'm willing to put out 400 grand, is because I save costs as I go. Year 2, I save 124. Year 3, save 124. And year 4, I save $124,000. Okay, so those are my savings. Also in year 4, other things happen. One, I have to get my working capital back to normal. The project's over. If the project was freeing up working capital, ending the project ties up that working capital again. So got to get the working capital reacquired. And the other thing is I get to sell the equipment. The equipment sold for $20,000. You know, and I know I don't get all $20,000. If I depreciated the thing down to 0, I'm going to experience a $20,000 accounting gain. It's taxable at 20%. So there's $4,000 in additional taxes. So I don't get all 20. I only get 20 minus 4. I get 16 of the 20 in terms of the equipment sale. Okay, that's it for my cash flows. So 400 minus 40 is 360. Negative. Negative 400 plus 40 is negative 360. 124 for year 1. 124 for year 2. 124 for year 3. And 124 plus 16 is 140. Minus 40 is 100 even. Okay. So now these are all my cash flows. I just present value it and decide if it's a good idea or not. So to present value, you just divide by 1 plus the discount rate to the power of however many years you're discounting. So our initial cash flow is 1.1 to the power of 0, which is 1. So it's negative 360 divided by 1. It'll be negative 360. This is 124 divided by 1.1 to the power of 1, 1.1 to the power of 2, divide by 1.1 to the power of 3, and divide by 1.1 to the power of 4. We could do this by hand. It would take a minute. I'm going to do it in my fancy financial calculator here. So I just enter cash flow, second function clear. So cash flow at time 0, 360 negative, enter. Cash flow 1, 124, enter. How many times did that one occur? 1, 2, 3. So I'm going to enter 3 as the frequency there. My next cash flow to be entered, that's not cash flow at time 2, that's just the next cash flow after the 124s, is 100,000, and it happened once, and there we have it. So we've done all of our cash flows. I'm going to say, give me the present value of that at a discount rate of 10%, enter. Hit the down arrow, compute NPV. I get 16,671. 16,671. That is my net present value. It's positive. And so should the project be accepted? Yes. Accept the project. I'll just note that number here, 16,671. Positive. That looks maybe like a minus there, so I put a plus beside it. Yes. Okay. So this was an annual savings of 130. If the annual savings were 80, which is 50 grand a year worse, would you do it? And you can already just see the answer is going to be no way. It's going to be very negative net present value, but let's crunch the numbers to determine just how negative the net present value should be. So here's how I'm going to do this. I'm going to just erase. I'm going to leave everything up, kind of all the number, like all the, for example, sales costs, EBITDA, all the titles up, and I'm just going to erase the numbers and we're going to put new numbers in, but it's the same question, just with slightly changed numbers. So no point in erasing all the guides here. So I'll leave this all up. We have the number 16,671. And again, you can just rewind the video if you want to go back to some number that was in there. I'm just going to erase all this. I'll leave the year 1, 2, 3, 4, and we can go again. So everything's the same except for this is not 130. This is 80, right? It's that number changes. Okay, so start from the start and we just do it again at 80. The numbers actually come out a little weird here because we're going to end up negative numbers, as you will soon see, but it's fine. So our sales are unaffected. Our costs are reduced by 80,000. So our EBITDA is up by 80,000. Unfortunately for us, our depreciation is 100. So our EBIT is negative 20. This is our first time with a loss before interest and tax. Having a loss, having negative EBIT means we have negative taxes. Our taxes are 20%. So it's 20% of 20,000 is 4,000. But they're negative 4,000 in taxes. We get a refund. It reduces our tax bill from the rest of our business if we're losing money on this one, at least accounting wise. So we end up at negative 16,000. Negative 20 minus negative 4 is negative 16. It is weird operating in negative numbers, but that's what's happening. So in terms of OCF, our EBIT is negative 20. Our depreciation is positive 100, and our taxes are negative 4. So it's minus negative 4, right? We would subtract our taxes, so we're subtracting negative 4. So it's awkward construction here, but negative 20 plus 100 is plus 80, minus negative 4 is plus 4. So it's plus 84 overall. Again, minusing negatives, never a comfortable thing to do, but there you have it. We've done it. So what does this look like in terms of cash flows? Well, suspiciously similar to the last one. The only difference is this OCF. So the year zero cash flows, still negative 400K, plus the 40 we save reducing our working capital needs. Year one, plus 84. Year two, plus 84. Year 3 plus 84, and year 4 plus 84, but minus the 40 of working capital that we have to reacquire. So again, we reduced our capital at the start. Project's over. The project that caused us to reduce our working capital, we're going to need to reacquire that working capital. Maybe we're carrying more inventory now or something like that. We also do exactly the same calculation for selling the asset, and it means we got 20 grand for it, but 4 grand went out in tax, so we get 16,000. From here is very much the same exercise as before. Minus 360 plus 84 plus 84 plus 84. And then 84 plus 16 is 100, minus 40 is 60. So this is plus 60. And same discounting as we did before. 1.1 to the 0, 1.1 to the 1, 1.1 squared, 1.1 cubed, and 1.1 to the 4th power. I won't do it in my I won't do it by hand, but I'll do it in my calculator, and we'll get the right answer here, hopefully. Let me clear what was in there. Second function clear. 360 negative is my cash flow at time 0. My cash flow number 1 is 84,000 positive. The frequency on that is 3. There's 3 payments of that amount, or 3 cash flows of that amount. And my second cash flow is 60,000. My second unique cash flow is 60,000. I only have one of those. Let's compute our net present value. Our discount rate is 10. Hit the down arrow, hit compute, and we get 110,124. And it's negative. So this is a money loser, and we suspected it would be. It was negative 110,124. Would you accept the project? No. Okay. So let's just a bit of a step back here. At $130,000 per year in savings, lost my mouse, at $130,000 a year in savings, this was a great project. We made some money. At $80,000 a year in savings, this was a bad project. The third question, by far the hardest, so if you're struggling so far, buckle up. This is harder step. It says, at what level of savings would you be indifferent as to whether or not the project should be accepted. At what level of savings would you be indifferent as to whether or not to accept the project? Okay, I'm going to erase something. I'm actually going to leave a few things up here, but I'm going to erase this. Again, you can just rewind if you need some of those numbers back up. I'm going to erase that. I'm going to erase these. Actually, why not just erase the whole thing? And the only things I wanted to leave up were the ones that didn't change. So the negative 400 and negative or 40 and what's down here doesn't change between the two. So what is this asking? It's saying at what level of savings would we be indifferent as to whether the project would be accepted? Well, what's the net present value where we are indifferent? What's the net present value where we go, oh, I could take or leave the project? That would be when net present value equals 0. We are indifferent. So we're looking for NPV to be 0. So we just did a present value on this information, but what we're missing is the savings, the operating cash flow, which is driven largely by the savings. So if I could figure out what is the operating cash flow, and remember, those were the same amounts. In the first part, they were like 124, 124, 124. In the last problem, or the last version, part B, it was 84, 84, 84, 84. So they're all the same amount. So I'm going to just say there's one variable to be solved for. Let's figure out what that X needs to be to make net present value 0. Now, how do I do it? Well, I know that I got to put out $360,000, just adding those two together, right? Negative 400 plus 40 is negative 360. And I can take the present value of these two as well. Negative 40 plus 16 is negative 24,000. Let's present value it up to there. So you just divide by 1 plus the discount rate to the power of the number of years you want to discount it, 1.1 to the 4. So 24,000 divided by 1.1 to the 4 to get that present value. And the idea is we just want to get the X's alone if we could, right? That's sort of, again, I mentioned this is a challenging algebra question. It's challenging for me. You might be seeing that in my explanation. But anyway, well, let's get the X's alone. 1.1 to the power of 4, 1.461. We get 1 over X. We multiply by 24,000 negative 16,392. And so that goes up here, negative 16,392. So we've moved those out of this section. So the payments that we're aware of, or the present value of all the stuff that we already know, is negative 376,392. That's just negative 400, positive 40, and now 16,392, the present value of the other year 4 stuff. Okay, so if these are negative 376,392, and I want net present value to be 0, it means the present value of these X's has got to be positive 376,392. And what we have is a pretty straightforward annuity, right? Year 1, this positive cash flows plus year 2's cash flow plus year 3 plus year 4 has got to have a present value of 376,392. We can solve for an annuity. I could do this by hand, right? There's present value of an annuity formula, and we're solving for the payment amount, the regular payment amount. But I've got the financial calculator here, so I'll use it. And I'm just going to fill in information. So what is my N? My N is 4 years. What is my IY? Well, that's the discount rate. It's 10%. What is my PV? Well, we've just said the PV's got to be 376,392. Because the present value of the other stuff is negative 376,392. We want it to work out to 0. So 376,392 positive. PMT, we don't know. That's what we're solving for. And our FV is 0. Okay, so let's figure out what that payment amount is. 4 goes in as our N. 10 goes in as our IY. PV 376,392. And 0 is our FV. Now we compute the PMT. I get 118,741. 118,741. That is my operating cash flow. That is the OCF. 118,741. Now remember, that's not our savings. Our savings is like up here. We got to go all the way back. So we're just stepping backwards through the problem. Unfortunately for us, we can't recalculate our taxes. We have our depreciation. Our depreciation is $100,000, but we can't recalculate the taxes. There's too many variables out there for us to figure out the taxes because we don't know our costs, our cost savings, and our cost savings creates our taxes. So it gets awkward. The best way to do this is to actually use the other formula we learned this chapter for calculating OCF. I told you this was challenging. So if you look back to problem 7.1a, you'll see we calculated OCF both the standard way, that's what we're doing here, and we also did it the tax shield approach to calculating OCF. And let me just remind you how the tax shield approach works. So tax shield approach. The tax shield approach, I can already feel I'm 20 minutes deep in the video and we're like going back to an old problem. It's a stretch. This is a challenging problem, no doubt. So I hope you're up for it. If you're hanging in there, thank you so much for hanging in there. Okay, so the tax shield approach says take our sales minus our costs times 1 minus the tax rate, and we add in our tax shield, and it's also called the depreciation tax shield because depreciation saves us some tax dollars. So first, let's calculate our depreciation tax shield, which we can do. It's $100,000 a year in depreciation. Taxes are 20%. Depreciation saves us $20,000 in taxes. So the tax shield, $20,000. Sales minus cost, that's an interesting one. Sales, we know, are unaffected. We're going after costs here. That's what we want to know. So our sales are unaffected. Our costs, well, that's what we're solving for, times 1 minus the tax rate. So 1 minus the tax rate's 20%, 1 minus the tax rate is 0.8, plus 20,000 equals, and this is our OCF. We just calculated our OCF. We said our OCF is 118,741. It's what's in the calculator, 118,741. I know it's in there as a negative number. It's not negative. Operating cash flow, just funny things happen as you use your financial calculator. It's positive 118,741. Okay, so 0 minus costs times 0.8. So 0 times 0.8 is 0. I'm just going to get rid of the 0. Negative cost times 0.8 is 0.8. Negative 0.8 costs, just multiplying it in, plus 20,000 equals 118,741. Let's take away 20,000, 118,741 minus 20,000 is 98,741 equals 0.8 costs and negative 0.8 cost. So let's divide both sides by negative 0.8 divided by 0.8 negative, and I get negative 123,426. So costs equals negative 123,426. Okay, that's our answer. So I know we took a long journey to get there, but the question said, at what level of savings would we be indifferent as to whether or not the project would be accepted? We would be indifferent. Net present value would be equal if our cost savings was 123,426. If that said 123,426, our net present value would be 0. Whew. This was a big problem and a challenging one. If you got through it, good for you. Thank you so much for hanging in there with me. By the way, I'm going to end the video now. Well, I'll give you permission to leave now. I just want to prove it. I'm going to redo the problem one last time. Again, you don't have to stick around for this, but I'm going to redo it as if this number had been 123,426, and we're going to see that net present value is 0 or close to it. It'll be off by a couple dollars because we're, it's 123,426.25, and I've missed a lot of decimals along the way. We're going to be close to 0 as our net present value. So let's try this one last time with 123,426 as our savings. We've solved the question. What level of savings? 123,426. Okay. Goodbye. This is just for my own fun. I know the things I do for fun, 25 minutes into a video, but 5 more minutes isn't going to kill me. I'd like to sort of see this one through. Okay, so if the question had said, we save 123,426, our sales unaffected, our costs are reduced by 123,426, our EBIT goes up by 123,426, our depreciation remains 100,000. EBITDA is 123,426. Our EBIT is 23,426, and our taxes here 23,426 times 20%, so times 0.2, 4,685. Our net income then 4,685 or 23,426 minus 4,685. By the way, if you can do this, you know these things inside out, right? Like it's challenging for me, and I've done a lot of these. So as a rookie, you should be pleased with yourself if you're getting through this, no problem. Very good chance you're smarter than me. Lots of my viewers are definitely smarter than me. Okay, 23,426 is our EBIT. $100,000 a year is our depreciation. Our taxes 4,685. So I'll subtract that and add that. So 23,426 plus 100 minus 4,685 equals 118,741. Oh, that's a good number. That's a number I remember from when we did this before. Oh, look at this. I think we're going to get it. I have a great feeling about this. Okay, so our cash flows still were 400 negative and 40 positive there, but our savings is 118,741, or our OCF rather, 118,741, 118,741, and 118,741. Oh, this is great. I'm pleased to see it's working. Negative 360 is our total here. 118,741 here. 118,741. 118,741, and the last one, 118,741 minus 40 plus 16 is 94,741. Okay, so again, we could present value this all by hand, divide by 1 plus the discount rate to the power of the number of years. We're not going to do that. I'm going to use my fancy calculator, CF, clear what's in there, CF. 360 negative, enter, down 1. Cash flow 1, 118,741, 118,741. Enter, down. Now we had 3 of them, 1, 2, 3. So I'll put 3 in as my frequency. Cash flow at time 2, 94,741. Hit enter, and there's only one of those. And now I'm going to compute net present value. So I go NPV. It asks for the discount rate. It's 10. Hit the down arrow. Please work. Please work. Before we see if it works, just hit one of those buttons for me. It's good luck. It's going to be good luck. We're hoping for net present value to be 0 or close to it, like, $1, $2, under $10. I'm going to take a W here. I'm going to take a victory lap. I got to hit compute. Here we go. Compute. 0.67. Yes. It worked, everybody. It worked. Okay. That whole last 5 minutes was just for fun. If you had fun, thanks so much for watching. If you stuck around, a challenging problem, I think, part C. Parts A and B, totally reasonable. Part C, heavy lifting. But if you made it to the end and you lifted the heavy stuff with me, Thanks for being here. Thanks for hanging in there. Have a great day. Bye-bye.